Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, June 5th, 2013. Well, a change of trend back to the downside today in a candle that's made a lower high and a lower low. Previous day's trading, we saw the market change trend and attempt to rally on a black-bodied spinning top type candle, a candle of indecision, and a candle where the market found some resistance roughly around the Tenkan-sen, with the buyers losing control in that candle. For the previous day's trading, the buyers attempted to take control, and we did see a change of trend, but a very indecisive candle. Today we have seen what was suggested yesterday, a change of trend, and there was good potential for that to occur. The market had to trade down below this 1630 level, where we saw some upside price rejection, and down below the Kijun-sen, and we have seen that in quite a bearish manner today. A fairly large black body candle where the sellers have made a substantial amount of net bearish progress. They've closed with control of this market, and they've been strongly committed to taking this market to lower levels for almost the entire day. I did suggest that if we could see a bearish close down below that level, we could quickly see the market testing down to the round number area around 1600, and there is every likelihood that the market will test that level tomorrow, but I suggest that that area may hold as very strong support. If we look here prior to this strong rally that we saw to the all-time highs around 1687, the market tested around there for about 4 trading days or so, or 5 roughly, and we saw some rejection, only fairly weak rejection, and we know that previous resistance can become support, so there is a possibility of that, and combined with it being a round number, there is a good possibility we could see the buyers coming back into this market. In terms of the Fibonacci extension, we're examining the first time downtrend and its relationship to the previous time the market was trending down. And here today we saw the market trade down through most of the important levels, the 38.2, the 50%, the 61.8%, and closed just above the 100% level. We have seen some minor rejection from the 100% level, but certainly not enough to cause any great concern. There is a possibility we could see a change in sentiment here, but not likely, and it's likely that the market will test 2 lower levels, bearing in mind that we do have the 1600 round number level just below where the market's trading. If the market does trade down below there, the 161.8% level may come into play around 1583, and it coincides roughly with the lows around these significant candles from the recent past, and that will has potential to hold as very strong support, and we should look for some potentially strong upside price rejection if the market does test down to those levels. In terms of the Fibonacci retracement, a similar scenario here. We're in an expansive mode of that. We traded through the important 100% level, traded exactly to the 161.8% level, and we've been slightly rejected from there. A likelihood that the market will test to lower levels. The 261.8% is around 1584, coinciding roughly with the swing low around these candles from early May, and it does suggest that there will be very strong support coming in down around that 1580 or so level if we do see the market test down below the round number 1600. In terms of the pattern that we saw previously in this market, it was the symmetrical triangle and the bearish breakout to the downside of that, the reversal pattern, and the bearish close, the market retesting back up to around the boundary if we extended that boundary, and then selling off once again, and the target was down around the 1589 level. There's a good chance of the market testing down to around that level. We could even see the market probing down through the 1600 level, testing down to around there, and see the buyers coming in, but this has proven to be quite a good successful trade that may have been put on with the breakout down below this pattern. In terms of Ichimoku, obviously a bullish market in the long-term time frame by trading above the cloud. The market is retracing back towards the cloud, and that's what we expect when markets are overextended and markets move from areas of disequilibrium, as we've seen up around the 1687 level. They're a long way away from the cloud, moving back towards the equilibrium suggested by the cloud. As the days go on into the future over the next week or two, the cloud will actually be moving up to meet the market if it doesn't trade down. So we will have some dynamic support close by price action over the next week or two if the market doesn't trade through the 1600 level. In terms of the faster timeframes, we have a bearish market in the medium and fast term timeframes, with the market trading down below the Kijun and the Tenkan Sen. That's the pink line and the green line, and that suggests that the market may have found some very solid momentum to test down through the 1600 level. If we look at the angle of the Tenkan Sen, it's pointing down quite sharply, reflecting some solid downside momentum. So the area around 1600 will be quite crucial to this market. And it does suggest, with the sellers closing with strong control and showing some commitment, that a test could extend down to around the lows, or the swing lows around this 1582 level or so. So we do need to watch the low of the current candle for a potential continuation of the trend. 1600 becomes important, as does the area extending in a zone roughly 20 points below down to around the 1580 area.